Good afternoon, everyone. I am Abhijit and welcome to a new episode of Investing Fool. In today's video, we'll discuss 5 mid-cap stocks. So there is some news about these mid-cap stocks. So we will discuss them. We'll look at their charts and we'll discuss whether such news should be part of your investment decisions, if at all. Whether you should base your investing on such news. So let's get started. The familiar disclaimer as usual that none of the stocks that we discuss should be taken as financial advice or recommendation or anything. Please do your own due diligence before investing. So what's the news? The news is that these 5 stocks that you see on the screen, these are 5 mid-cap stocks. They have a high likelihood of getting into the MSCI Standard Index in its February reaching. So so a lot of times these news keep coming. So every 1 month or two you would be seeing such news play out, and typically for MSCI, this reconstitution of indices happens on a quarterly basis. For some of the nifty indices, it happens on a semi-annual basis. But the news that is there this time around is that these 5 stocks may move from the MSCI India small cap index to the standard index. Now there are 2 things to note about these stocks. First of all, these are not confirmed names. So these stocks are not confirmed to be part of the MSCI Standard Index. Currently, these are only estimates as per one brokerage, that is Motilal Oswal. All this is in public domain, so you can check it out. The second thing that I want to mention is that we already have positions in some of the stocks that we are discussing over here, right? So a couple of these stocks are a part of our core portfolio. So please keep that in the back of your mind. And as I always say, anyway, these are not buy or sell recommendations. So you have to do your own due diligence before investing. Now, why are these stocks moving from this index to that index, right? Similar to why something moves from Nifty 500 to Nifty 200 or Nifty 200 to Nifty Junior to Nifty 50. It's all the function of market cap. So as stocks keep performing, the price appreciation keeps happening, their market cap keeps growing, and as the market cap keeps growing, they get like eligible for inclusion into higher and higher tier of such indices, right? So the confirmation around these on which stocks are finally going to make the cut, that official communication from MSCI might happen around mid of Feb 2025, and the actual changes, which is the actual inflows and outflows, might start from with effect from March 3rd, 2025. Now a lot of so people might expect that a lot of passive inflows or outflows will be based on this, and that is true to some extent, but we will discuss about whether you should base that expectation to get into these stocks once these news come out in the public domain. Do note that these are not the only changes that are part of this reconstitution, rejig, whatever you want to call it. So these 5 stocks have a very high likelihood of getting into that index. There are also other stocks that have a low to medium likelihood or probability of getting into that index. Also note that there will be many stocks that are already existing as part of this index, right? So their weights might increase or decrease in this rejig, but we're not talking about that here. We're focusing on these new entrants. Okay. So you can see the market cap, all of them are around the same figure, 60,000 crore market cap. All of them are mid cap companies, and you can see the inflows, 423 million USD for Coforge, 250 million USD for Fortis. So all these are expectations, right? All these are estimates. So whether they actually play out or not, there may be a margin of error in all of these estimates, and how much the price will appreciate further if such inflows happen. They are like result of 2 things. So first thing is that a lot of it might already be priced in, and the second is the usual route that okay, new passive inflows might happen into these 2 stocks. So there has to be a balance between those two, and how that balance plays out we'll only know in the future. Let's first take a look at the charts of these stocks. So as we were discussing that stocks that keep performing consistently, price appreciation keeps happening, and because of price appreciation, many of these stocks might get into momentum strategies as well, because we take price appreciation into account, and because price appreciation keeps happening, the market cap keeps growing, and you can see the 6 month performance of all these stocks. So Coforge 6 months, 64% returns. Paytm 6 months 138% returns, and people will be very happy to like ignore this part where it fell like a stone from here to here, consolidated for a few months, and then only in the last like 6 months around it has uh, given this huge run, right, from the bottom all the way to the top. uh, Fortis 6 months around 55%, Coromandel 6 months 24%. Now standalone, if you see, like Coromandel is the only stock that like that has probably consolidated a little bit around here from August to October, and the 6 months return is not very high. But for all the other stocks, it's reasonably high, right? You can just see their charts are going in a linear curve. They're much above their 200 DMA. None of that them have even like kissed their 200 DMA recently. In the recent fall, they all have been much above their 200 DMA. Even Coromandel, right, 6 months 24% returns is great for a stock, in my opinion. So yeah, so you can see the kind of trend that these stocks have shown to be included, to be like for such expectations to be made that this stocks could actually make the cut and could be part of these new index in the next quarterly reconstitution. Okay, so now the point is, should you buy on such news, right? And the short answer, as per me, is probably not. But again, as I say, this is no recommendation. You are free to do your own due diligence and invest as per your priorities. But this is just my opinion that we should not buy on such news, and I'll tell you why. Like I feel that way, because most of such moves, whenever they happen, or whenever they come to finally, whenever they happen to come finally to the public domain, most of such moves are anticipated and they are priced in for these stocks, right? So you must have heard the phrase buy the rumor, sell the news. So whenever the first information starts trickling into the market participants, into some of the market participants, right, people like you or me would not know these things, because we are getting our news from the public domain, right? We do not have anything, we do not have any rumor, any inside information or anything like that, right? But participants, people who are in the know, they are in the know, they would know, right? And they would position themselves accordingly. So whenever the first rumors start trickling in that such and such stock might move to such index, and because there is always an expectation built in that whenever something moves to such an index, significant inflows may come. You may not be right on how much inflows will come, but some or the other passive inflows, because so much of passive funds base themselves on the MSCI indices. Because of that, people expect a lot of inflows to come in for any stock that gets it added into the index, right? So whenever the first rumors start trickling in into the market participants, they would position themselves accordingly, right? But when the event actually plays out, by that time it may be too late. Some of those market participants might actually be waiting on the sidelines. They would have bought healthy positions. They may be just waiting or biding their time to liquidate and sell those positions and get out of that stock. So this is something similar, which happens to stocks after they get into Nifty 50, right? So these news also comes that okay, this and this stock might get included in Nifty 50, and it's not that some like chunk of the market doesn't already know that. By the time that news actually hits public media and gets to you and gets to me, people would have built their positions that okay, this is going into Nifty 50 and so many passive funds are based on Nifty 50, so the stock might see additional inflows, and that's why the prices are already jacked up, right? The prices have already factored that expectation completely and maybe gone overboard with it. That's why we see a lot of times stocks get into Nifty 50, but the kind of trajectory that they had just prior to getting into the Nifty 50 index, they cannot maintain that after getting it, right? And then they slow, the performance tapers off. Sometimes we have even stocks like Divis Labs, which get into the Nifty 50, the performance slows down so drastically that they've fallen from the Nifty 50 as well, right? And then again, they would be trying in the months and years to come to get back into that position again. So you may be too late to get in now on these stocks, and many of the holders might be waiting to just exit. Okay, again, as I said, it is a balance. It will always be a balance between how much of it is priced in, how many market participants are are already positioned and then waiting to go out, versus how much of actual inflows come in. So all those are moving parts. We won't actually, we will never know that, but there is a high chance that the future you are expecting, or the expectation that you have built, might be already in the price. The future that you are expecting might already be in the past. So whatever you are expecting will happen, there is a high likelihood that it has already happened, it has already played out, and now you are just even if you get in now and it gets some price appreciation, you might be just getting in to collect the last vestiges of that move. Okay, so but the bottom line, the overall bottom line is that you should buy or get into stocks as per your strategy. And this is not about momentum investing or value investing or growth investing or whatever, right? Whatever style of investing you have, as long as your strategy, as long as your entry criteria are met and your strategy tells you to get into some stock or the other, disregard every other news and get into such stocks, right? Two of the stocks that are part of our core momentum portfolio, we also have gotten very recently only, and it's not because of we knew the news, or we didn't buy after the news. It was independent of the news, right? Our strategy told us to get into those stocks, we got into those stocks. It's fair and simple, right? So if your strategy is saying get into the stock now based on some entry criteria that you have set much before, not based on this news, then you should definitely get in. You should not have double minds about because you have conviction on your strategy, right? So get in as per your strategy, independent of such news. If your strategy is not saying to get into those stocks, then it would be very wise to probably not chase the news. Never chase the news, because as I said, what you think will happen might already have played out in the market, and by the time you get in, all the others who sort of preceded you in that thought process might be just willing to get out of that stock, and the future that you think may not play out the way you assume it to be. Okay, so that's pretty much it for today. Let us know if you like this video. Thanks for watching, and if you haven't subscribed to the channel, then please consider subscribing to the channel. Enjoy the rest of your weekend. I'll see you in the next video. Take care. Bye bye.